All right. Good morning, everybody. Hope you guys are doing great. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. It's our live Wednesday morning session. I know I've got a couple of you already on watching. Do me a favor, get your fingers ready. Type in the chat box so that I can see who you are, where you are. That lets me know that you guys are indeed here and you're listening, and I can and I've got human beings on the other side of this microphone, because sometimes it's kind of weird when you're just talking to a camera all by itself. So, there he is, Hemranth. Good morning. Good to have you this morning. Good morning, everybody. So we are going to do what we do each and every day. We identify 10 to 12 futures markets from an educational perspective, looking for both breakouts and reversal trades. Yesterday was an interesting day because I was really waiting on my NASDAQ breakout, which never came, right? So we're still waiting on that one to kind of hit through. So let's go ahead and get rolling and do our thing. Look at this. Let's see, California. We got some India, Louisville, KC. Beautiful. Nobody here but us Cybermen. That's a good point, Steve. That's a good point. So West Texas. Jason, what's funny is you're in West Texas. I'm in East Texas. We might as well be in separate countries because it's not close. All right, let's go ahead and let me shrink my head here so you can see the charts a bit better, and we will get rolling. Okay, so this morning our S&P, we're down about 5 points this morning. An interesting opportunity when we look at our S&P talking about a reversal area. So yesterday we had this little 15-minute zone, which was freaking money off this little level for a few minutes. I mean, we came down and got a little touch off of this level, and then we kind of just chopped sideways a bit until the early afternoon. So hopefully you're able to get a few points there. But now, interestingly enough, that level, which then, the second time through blew down through the area, that area we based in it again. I'm wondering if we're going to get a little reversal off of this level. Okay, Sam Jones, good to see you, Mr. Sam. A Pittsburgher. So I'm wondering if we're going to get a little reversal off of this level or somewhere close to it, because we are looking to get that kind of a setup at the moment. When I go to a 1 hour chart, that's a pretty clean potential reversal zone. So what I'm going to do for those of you guys that are regulars, we color these yellow. And we color these yellow because it's a flip zone. It's a flip area. Now, I need to make sure that my stop is above this high in here. Oh, that's right, Bentleyville. I totally forgot about that, Sam. Bentleyville, PA. My first ever job was Bentleyville McDonald's, right off I-70, exit 12B. So we are approaching this area in here. I wouldn't be surprised to see a bit of a reversal off of here. Now, I will tell you, when we go to our 4 hour, my 4 hour trend is still very much entrenched to the upside. And so technically, if you get in on this, you're getting in a bit early. It's not the greatest of levels in its formation, but it was created at the 2 a.m. reversal, which is ideal, right? So what I'm going to do is we know it's goldenrod because it's kind of a flip area. But on the 15-minute chart, it would be just this area up here. Now, we may not make it up to there if the market does a bit of a quick sell-off, and I'd be okay if you said, well, Chuck, I don't know if I want to wait that long. I think I don't know if it's going to get there. I'm actually okay if you want to go candle to candle on an hourly short. Now, unfortunately, this is a 7 o'clock candle just started, so we've got 56 minutes before this candle is printed, and so it's not there. Brian says, really, looks like a lower low and lower high. Well, on my 4 hour, Brian, let me pull up my 4 hour. We find trend on our 4 hour. So this is my last swing high. This is my last swing low. This is the swing high prior to that. This would be the most prior swing low. I guess theoretically you could use this as a swing low, but either way, I've got higher swing highs and higher swing lows, right? So Brian, that's ultimately what I look for. Now, and the other piece to consider is, for those of you that are, trend channel followers, that's why you'd want to use, just know that it could be a confirmation entry to get in on this short or it's just be willing to take a small stop out, but change your bias right away because with the chances are we could continue to trade higher on the bigger market. So those are the areas that might make sense when we're looking for potential reversal today. So Tushar, Southern California, beautiful place. Haven't been there in a while. So that's our 15-minute level in the S&P. Now, if we keep coming down, let's just say that we do keep coming down. Where's our next decent stopping point? Well, this level here wound up being a pretty nice reversal yesterday off of right there. That was our reversal in the overnight, so I don't want to use that again. I'd have to go a bit lower and come into this region. Now, this region is not by any stretch of the imagination a super clean level, and it's not a super clean level because if I look at this, we had a rally. This price rallied up to here. We dropped into here, and then we rallied back up. And then we dropped again, and then we rallied back up. So, and then, by the way, we got to the top of this candle, and then we came back down. So the fact that this is a red candlestick tells me that I call this, now this sounds kind of weird when I say it, but I can't think of another way to do it. It's kind of an incestuous level that's always just leaning on itself, if that makes sense. It's one of those levels that's kind of eating away at its own self, and so it doesn't have as much strength. So while I look at a level like this, I don't always see this as a super strong area. I could definitely see it as a target if we do come back down in here. Yeah, it's exactly right, Liz. It's not a super strong, but it was formed at a really great time of the day, right? And so I'd be all right if you said, well, I like this level. I don't love this level. Now, by the way, on a 4-hour, that would take us back to the last pivot where we had a breakdown trade set up, and price just never got there. So I'm okay with it. It's not a terrible level. It's not the world's greatest, but it's not terrible if you take the short there. Definitely good for a profit target on the short. All right, let's move over to the NASDAQ. And this dang thing, I had my long set up yesterday because I thought, look at all this basing. Look at all this basing. I saw all this basing yesterday morning, and I was like, oh, yeah, here we go. Let's do this. And it just never happened. But one of the things I would like to talk about is, no, it never happened. We didn't get the basing, but we also didn't stop at these demand levels. Now, remember, what's the problem with, for example, this demand level? What's the biggest problem with this demand level? Well, the time of day it was created is the biggest problem. It's created at 7 p.m., and that's Central Time, and that's one of the absolute worst times of the day, lowest probability times to see a high-quality area, high-quality zone. And so when I look at this on a 4-hour chart, it looks like we could be setting up for a little bit of what I call the Batman trade. For those of you that aren't familiar with the Batman trade, this kind of looks like the top of Batman's cowl, right? You think about Batman's got that top up there. And so could we be coming down from here and seeing a slowing of momentum? Well, we have to remember this specifically about the NASDAQ. What's coming up about the NASDAQ that is very, very important? Can anybody tell me what's coming up specifically in the NASDAQ that's super important? And we're talking about the NASDAQ more than any other market. The fact that the NASDAQ has things happening in the next few days. Anybody know? Type it in the chat box if you got an idea of what's coming. Very good. Earnings. So when we look at Apple's got earnings coming up. When we look at Facebook has earnings coming up. When we look at Google, we've got earnings coming up. When we look at Microsoft, we've got earnings right around the corner. And so when you have all of these earnings so close, Tesla I wouldn't put quite as important. And the reason being is I look at what are the main holdings of the NASDAQ, right? What are the main holdings of the NASDAQ? And I don't think that everyone is familiar with this, what the main holdings of the NASDAQ are. Let me throw this over here. QQQ. I just use the QQQ because it's going to give me a good approximation. But the top 10 holdings of the Qs. Apple, 11.59%. Microsoft, 10.69%. Amazon, 8.14%. Facebook, 4.39%. And then Google, 8%, right? You got to take both of the Google shares. So when I look at this, you've got, what's that, 11.5, 10.5, there's 20, 22, 30, 34, plus 8, let's call it 42%. Roughly 42 to 43% of the NASDAQ is split amongst essentially 5 stocks, right? And then you got, and then Intel's right below there. So the fact of the matter is that the NASDAQ is heavily weighted by 5 stocks. And that is something to consider and something that we need to make sure that we are aware of in looking at the NASDAQ. And that's where, I think while I'm usually a pretty bullish believer in the NASDAQ because it's been our strongest market and there's no reason not to be, I am going to not over position myself when I have these earnings pieces coming into play. And that, I think, is something that's worth considering. So if I want to take a position in NASDAQ, I think today you could actually have the best short in NASDAQ, if you wanted to take it, would be basing right here and a breakdown below that level. I think if you do that, you've got a move down to about 10.7. So you could probably get about an 80-point move off the NASDAQ from 10,783 down to 10,700. And the reason I say 10,700 is because of this resistance back here. And then this drop base rally, which is all encompassed in this one candlestick, right? This one candlestick here is its own drop base rally when I go to a smaller time period. You can see it right here, drop base strong rally away. Now, when I look at this on the 15-minute, though, I'm going to change my zone to just this wick over wick right here. Yeah, they definitely do strongly influence the S&P, and definitely to a lesser context. The other thing to consider is that why do you think the Dow Jones put Apple in the Dow Jones, right? I mean, that's why Apple said, hey, that's why the Dow Jones said, hey, let's kick out the bad stocks and let's put in the good ones. Was because they have the ability to put in multiple stocks and they change the makeup of the Dow. All right, let's go to the rut, which does not benefit from having Apple. So the Russell does not get the benefit of having Apple. Yesterday we had a little breakout trade, and we got a little run in our breakout trade, but then 1, 2, 3, 4, 5, 6 candles later, the market said, hey, I ain't really doing much. It's probably time to get out. For those of you that are unfamiliar with our 6-candle rule, we are big believers in the 6-candle rule. And the 6-candle rule basically says this: if you get into a trade and it hasn't started making the move you expect it to make within the first 6 candles, get out of the trade. Now, that's the 6 candles based upon your entry, because if it's not gonna, if it's not gonna make the move, don't sit around waiting for it to make the move. Get the heck out of Dodge. And this is a great example of that from yesterday. Didn't really give us a stop out, but definitely gave us the 6-candle rule. Now, in looking at this on our 1 hour, we actually do have a pretty decent reversal candlestick, which was formed in the last hour. And now it's kind of chopping around. I think that if you wanted to go candle to candle short, this could be an opportunity in the Russell to go short. We can go even a smaller time period and see, all right, does it make sense to get in on this thing? If you wanted to go short right now, I wouldn't be mad at you, with your stop just above 1481. And that would be, the area that I would look for. Some would say high on the curve. Some would ignore that. Trend trumps curve every day of the week. And that's one of the things I love about it. Because remember, when we bought this breakout right here, we were high on the curve. I'm just saying. So anyway, point being is that when we're looking for a decent opportunity, we may get an opportunity. If you wanted to go short on this one, you could wait till you get below the low that we've already put in, but your stop would just be above this 1481 region. right up in here as it makes a decent little setup. All right. And then the Dow Jones, in the Dow, we really haven't come into any of our setups. We actually hovered just above what was a pretty good setup, and that's this area right in here. We'll see on the 1409 area, similar to the ES. Let me go back to it. Oh, 1490, excuse me, 1490. Yeah, I think that 1490 level, very similar to the ES, is okay. I'll just be quite blunt. I don't know that we're going to make it that far up, so I didn't really even consider it because I don't know that we're going to make it that high up. I feel like the good chances that it can keep settling down. Let's turn that into a purple level. And that's a purple level because it's a 15-minute chart. But I will mark it off. So, all right. And then the Dow Jones, Mrs. Jones and me, we tell each other fairy tales. We stare at the beautiful woman. But we are going basically sideways on our 4-hour chart. There's not a whole lot to it as it's just kind of jumping in through here. Now, we did come close to this hourly level. And by coming close to this hourly level, we have a very simple rule that we follow. We take our level and we switch it to a confirmation entry. Now, I will say this. I have to switch it to a confirmation entry. I don't know that it's as great of a long as some of the other areas. But I think that you could, once again, get a short coming back down into that region some point today. Now, remember, all of these shorts are a little bit more suspect, primarily because we have those earnings coming out, and our big picture trend in the S&P is still to the upside, right? So our 4-hour S&P trend is still very much to the upside, and so I don't necessarily want to change my bullish bias. That's why my entry on here is on a 15-minute chart, meaning if I'm going to be wrong, I want to be wrong quickly, right? And that's something that I think is unique about the style of trading that not necessarily unique. I think a lot of people say that, but the point is that when I'm wrong, I want to be wrong very quickly. I want you to tell me I'm wrong, and I want to get the heck out of Dodge because I don't necessarily want to stay in a trade longer than I have to if it's going against me. Okay? I think that our Russell is probably our most bearish of all of the markets today. As far as an opportunity, and then the NQ, if we get the basing here, is pretty good. So for those of you that take a screenshot of these markets, go ahead and take a snag. For those of you that are Traders Army members, I will share this grid with you in the trade feed. As soon as I'm done on today's session, we'll post this into the trade feed so that you guys can just download this grid and your lines will already be there. All right, so let's go to commodity markets. So on our commodity markets, yesterday, we did get a little breakout on our 4-hour trend that we had spoken about, this, the longer-term bull call spread. If you didn't get in on it and you still want to, I think you've got an opportunity somewhere down in this region here. Our stop was very tight, so it's a very tight stop on this piece so that you've got limited exposure in that trade if you get the reversal. And remember, we were looking at the longer-term bull call spread for price to rally higher. If we rally up off of this and you want to get into that position, this actually created a pretty good little area of demand right here at this speed candle. Not the best time of day for a speed candle to be formed, but it is a very strong move away right in here. So on the 1-hour time period, though, coming down fairly quickly into one of these regions in this area for a potential reversal. Now, other than that, I don't see a whole lot of great small time frame levels and trades on that piece. Inside of our gold level, this one was a stop out on an iron condor for me as I looked at an 1850 by 1780. Our northern leg came in and said, hey, you should probably get out. And we saw that with this, we had this basing here and then a very nice strong move to the upside. For a potential breakout. It's now given us a retest. It may come back down, so if you did hold on through that, you may get priced to come back down on that trade. But I can't look at any of these from a directional perspective. I need to come all the way down into this region here Yeah, Liz, you're correct. The oil report is out today. I will say the market hasn't been doing much on those oil reports. We've not seen a whole lot happening on those oil reports the last few weeks. They're not gangbusters, right? They're not really causing too much movement. But if there's a breakout trade on an announcement, we don't trade these things. We don't initiate a trade based on an announcement, right? If we're in a trade, we just make sure our stops are tight, but we don't start a trade, especially a breakout trade, based on an announcement. All right. Nat gas, we had our gap and go level, which worked out really well in the nat gas. And then we came back to our demand area and got a little bounce off of the demand level. So to our target. So those levels both worked out pretty well. I'm going to take this one now and I'm going to remove it. I would normally look at it a second time, except for the fact that it's a retest, which makes it a confirmation, and we're in a downtrend, which additionally makes it a confirmation. So all those things combined tell me I'm going to take that completely off of my chart. Looking at the 1 hour time period, we actually have a pretty decent little supply area right up in here that we may retest here shortly. And then there's a little wick over wick right here that might even be a bit more attractive based upon being formed at the London Open for a short in nat gas. Copper, we had looked at a potential breakdown area here in copper. We rallied up away from there very strong. And so we could theoretically have a breakout above this region here with all these upper wicks being touched, but I don't know that it's going to be a great setup. I actually kind of like this is a pretty nice strong move down. We've already retraced about 50% of this speed candle. Let me make sure that that's 50%. Yeah, we retraced 50% of the speed candle, which is usually a pretty good opportunity for a candle-to-candle play. And so if you're short that thing, you're actually doing okay with a stop just above that green one right in here. All right, let's move over to bonds and currencies, as we've had a fair amount of bullish movement in the last couple of weeks on our bond and currency markets, as we're seeing continual weakness in the dollar, as our dollar continues to maintain its weak stance. The ZN is near the top of its 4-hour range, which is our 10-year Treasury note, which I think is what the TY on TradeStation, for those of you that trade on that platform. So now what we're seeing here is a pretty nice upward trend into resistance. So technically, you could have a breakout trade here. My biggest fear on this from a breakout perspective is that you take a fair amount of risk for something that may not be able to go all that far. So if you wanted to take the breakout, you are setting up for one. Your stop would have to go below this area right here. But remember, I mean, just fundamentally, for bond prices to go up, what has to happen to yields, right? If we think about the way bonds work with an inverse relationship, in order for bond prices to rise, those yields are going to have to be cut. Well, if the Fed is no longer cutting our yield, what they're doing now is instead buying corporate bonds, I don't know that we're going to see a big spike, right? Yeah, Brian, it does. It feels a bit trappy to me. It feels a bit like a bit of a bull trap. And somebody has the money to pump it up here, and a lot of people are going to buy when it breaks above this area of resistance. But I think they could be buying right into somebody with a lot more money's sell orders. That's my fear, and so I'm going to stay away from it. Whoa, that's not what I wanted to do. I'm going to stay away from it only because I don't know that it's going to be a great opportunity and a great setup. Now, in the Aussie yesterday, we rallied up to our confirmation short and blew right through it, and then we came to another short and blew right through it. That's okay, because was there a reason to take this short on the limit entry? Should we have taken this short on the limit entry? Hattiesburg, Mississippi. I've driven through Hattiesburg, and then that was it. That's all. That's as far as I go, James. Sorry, man. I'm sure I'll drive through it again. Upper wicks don't concern you. Are you talking about on which one, David? On the bonds or on the Aussie? And Liz, the answer is correct. No, there's no reason to have taken this short. why wouldn't we take this short? The reason we wouldn't take this short is because our big picture trend is up. And our big picture trend being up tells me that it has to switch to a confirmation entry. Okay? Has to switch to a confirmation entry. Well, that's okay because we went right through there without having an entry. And that's pretty much every supply level in a big picture uptrend tells us that we have to get some of that entry. Every supply level above us. Right? Now, what about demand levels below us? Well, on our demand levels below us, this is a nice, clean little 15-minute zone right in here where it might see a little reversal. A little bit concerned with it because we've already got that big green upper wick that came right out of it. So this upper wick right here gives me a little bit of cause for concern, but not too much, and I'm okay with this little area in here. Very small level where we could get a bit of a reversal today. Okay? David, so selling pressure on the CL. You talking about our 4-hour CL trade? Let me go back to that real quick, and then we'll continue with currencies. So yeah, there's a lot of upper wicks on the 4-hour that are definitely indicating selling pressure, no doubt. Upper wick, upper wick, upper wick. I'm just going with the big picture trend and what the big picture trend is telling me. Now, we're also seeing a lot of slowing momentum as well. And that's why I took the options trade. The reason I would say the options trade rather than the straight futures contract is because I'm slightly more concerned due to those upper wicks and to other factors because it's a little bit of a weaker level. All right, let's move over to the euro. As the euro continues its march higher, straight up now tell me, as the euro goes higher and higher. On a daily chart, let's go to a weekly. On a weekly chart, the euro, we don't really have any strong resistance until this 1717 area on the weekly time period. So I'd be okay with pretty much any opportunity to get long, even if it's a breakout opportunity to get long. Pullbacks are obviously going to be our preferred method to get long on this when it's going this far, this fast. If we do get a pullback, that might be a better setup, but we got a really strong move up in the overnight. Yes, Basha. That was a bull call spread on crude oil that we had looked at. I think it was the October 42 by 47, which paid a pretty good credit. All right, now this area does have a little wick over wick area right here, so you've got a bit of a level on top of a level. The wick over wick area is very, very small. On a 15-minute chart, it's just this area right in here. So if you wanted to give this a go on a 15-minute, I think that's okay too, if we're a little bit overextended in this euro. Okay? All right, Canadian dollar. So our Canadian dollar, we are coming up to a supply level. We are not quite there yet. And so there's no reason for me to take this short unless it's a confirmation entry. Now let's go look at that on a 4-hour and see where that's coming from. On a 4-hour, it's this little area in here. We're rallying up into that level pretty strong and pretty hard. I would prefer a confirmation entry in this case. If I look at the 1 hour, the formation of this level, let me zoom in so we can see it. The formation of this level is really just this upper wick right here. Okay, it's just this upper wick right in there. Let me zoom in on that some more. Right, but it's also a bit of a retest of this wick over wick area. So it's not the greatest level in the context of a very strong uptrend. But if it helps us to pull back a little bit, it might get us pulled back into this 15-minute region, which is pretty clean. Okay? So that's the level that I would look at. Now, we have 2 more markets left, the Great British Pound and the Japanese Yen, but there's a bit of a delay in the chat box. So if there's a stock you want me to look at, or a currency pair you want me to look at, or a futures, whatever, make sure you type that in the chat box so that I have time to do it. Because if I ask, hey, anything you want to look at, then I'll have to have dead silence for a little bit while I'm waiting for you to type it in. So there's something you want to look at, type it in now so that we have it. All right, Great British Pound, same thing here as we had in the Aussie. Our confirmation entry never triggered, right? We went right through it. So no real reason to enter that position because once again, our 4-hour trend is up. So we would have had to have gone in with the short entry or the confirmation entry. Then we fell and we almost got entry here. So by this being an almost entry, we have to change our bias to a confirmation entry here because it gave us an almost fill, not quite a fill as of yet. So if we get a pullback on this, on the 15-minute, probably your cleanest level is this one down in here. If we make it back down to that region, I think you could have a decent reversal at this level. All right. Next, the Japanese yen. This thing. We had this little bit of a breakdown here below our potential breakdown line, but there was no basing, so there was no entry. I still think that's a good breakdown entry level, but then we really rocketed up on this thing yesterday as we had that huge move up during the day. And now it's kind of retracing, right? And that's a speed candle. We anticipate speed candles typically to get retraced. So we could look for a reversal right off here, right off the origin of this move. If we get basing inside of this level, though, that'll call that dead. Okay. All right. Let's see. Can we look at silver today? Let's look at silver. So in silver, we had a breakout in silver. Actually, we looked at this on Sunday night in the live trade room, where we talked about a potential breakout in silver. So anybody who took the live trade room silver breakout, you were handsomely rewarded as it is really rocketed up. I did not anticipate that. It's kind of like an anchorman when he sits down and goes, "Whew, that escalated quickly." But we did get a very strong move away in silver off of a breakout trade. Remember, this is why we do breakouts. So now we gave a bit of a pullback. We almost got to this level here, unable to get filled. So I need to go out. Whew, we got to go way out. And so, yeah, our supply area. Oh, that's beautiful, Liz. Love that. Our supply area is up in here at 28. That's really where our supply area is. So there's no real stopping silver until it gets into that region. We do have a little weekly level here to pay attention to. Right? A little level here to pay attention to. We may get a little reversal down off of this weekly area. And so if we do, and you want to take a pullback, you've got a couple of good pullback areas. This one probably being the cleanest and the easiest to spot out of all those. This one here, we came close to it, so I don't know that I would lean on that. So and this is a whole round number there at 21. So I think that's the best if we get the pullback. But I think the better is to do this to take the breakout if we get some sort of a basing period. Yeah, Corey found that silver BFF a while ago, and it's SLV BFF, and it's been running. All right, David's asking about CL. Didn't we go over CL already? I thought we went over CL and talked about those upper wicks. Maybe it just put it on again. SPX. So yeah, so somebody's asking me about the SPX trade. So SPX trade, for those of you that are unfamiliar, I like to look at these for one-day credit spreads. So I will be looking at this for a one-day credit spread. You're not really going to get much in the way of what we're going to get for a credit until the market opens. I will say last Wednesday, we talked about the 31.95 level. If anybody took that, you were handsomely rewarded. And then you got it again on Friday. And then you got it again on Monday. That 31.95 level, it paid you every day last week. I think we're a little far away from it's going to pay us today. Although where we open up, if I just put these two together, put the ES on the right, the SPX, or ES on the left, SPX on the right. Oops. So 32.45. So we're going to open up somewhere down in this region here. We're going to open up somewhere down in this region here on the SPX, because remember the ES and the SPX, they're going to come together at some point, right? So when I look at my ES level, I've got this 32.04 by 32.15 kind of demand. Well, on the SPX, that's the same areas that we were looking at on a 15-minute chart for potential zones. So what I'm going to look at today is to see if I can get paid probably something in the 32.70 range if we think that we are going to have a bearish day, which it looks to be a bit more bearish. Maybe on the bull put spread, on the bear call spread, maybe somewhere around 32.75, 32.80, and then on the bull put around 32.15. Now I will say that I have not been doing the bear call as much as I've been doing the bull put, because I'm, as we were in this strong upward trend, it's been kind of scary to do that, frankly. In this instance, I'm okay because we're already coming down off of it, and I think that we may chop sideways just waiting on earnings. So, all right. Let's see if I got everybody's. So any other stocks that you guys want me to look at for today? Please type them. Go ahead and type them into the chat box. Or if you guys want to look at an individual currency pair, we can do that as well. If you've got a specific equity that you want to look at or a currency pair, let's take a look real quick just as we're coming into earnings. My minimum credit rule is I want to get 15% on capital collected. So on capital tied up. That to me is what's important. All right. So on Microsoft, I'd be interested to see what happens with our earnings report this afternoon. If we get a poor earnings report, which frankly I don't anticipate, and the reason I don't anticipate it is because Microsoft has really benefited from what's happened with everybody moving to a virtual environment, right? The Microsoft Teams is really picking up some steam. So that you may have a decent little area of demand right down in here. Now, the good earnings, this could already be priced in, however, right? I mean, you think about it, Microsoft went from 130 to 216. That's a heck of a move for a mega cap stock like Microsoft. So it could already be priced in, but if we come back down to this region, you may get a decent entry opportunity for a swing trade. When we look at our implied volatility, we're actually still at a fairly low IV range relative to when we, lost our freaking minds due to COVID. But we are above our normal kind of comfort area. So, it's not quite high enough for me to look at a BFF even. But if we just take COVID out of the equation, right? You take COVID essentially out of the equation, we're still higher volatility than where we used to be, right? So our volatility used to be in the 31s. Now we're in the 40 region. And so if volatility comes back down, that actually still may be a decent play. So that's you could theoretically look at something like a BFF at Microsoft, where you are selling the puts down below at a place where you're willing to own the stock, and you use that in order to finance the bull call spread up above. All right. Let's take a look at soy. I didn't look at soy this morning, and then I'm going to log this thing off here shortly. All right. So looking at soy, we have our 4-hour chart. Ooh, we actually have established a new downtrend in soy. How do I know that I've established a new downtrend? Because trend is determined based upon the most recent swing highs and swing lows, right? So what am I looking for? Well, what's my last swing high? It's right here. Where's the swing high before that? It's right here. Where's my last swing low? It's right here. And price has gotten below our last swing low. So now, theoretically, I can look and enter shorts if we get the setup, okay? So let's go to a 15-minute and see, okay, is there a decent potential for a short setup? And in reality, you've actually got a little area right here that might make a good short setup. And it's small enough that if you're wrong, your risk is very minimal. David, can you explain the difference between wick over wick zone on 15 minutes versus 5 to 10 minute zone? So, David, in my mind, I don't go to anything below 15 minutes. So I have just a very strict trading rule that I don't go below a 15-minute chart. In reality, a wick over wick on a 15-minute zone is oftentimes going to be a rally-based rally or a drop-based drop on a 5 or on a 10. I just have a very strict trading rule that I don't go below 15-minute charts. And the reason for that is because I have seen, me personally, much more trading success in staying with larger time frames. So that's just my personal, insight is what I've seen be effective in my trading world. And so is there much of a difference? Not necessarily. But the wick over wick zones on a 15-minute is as small as I'm going to go. I don't go to fives. And some of the guys try to goat me and they try to get me to go look at a 5-minute chart, and it's like pulling teeth for me to do that. Because I've been in a situation where I was in a room where, essentially I was told you should, you take a trade every day, take a trade every day. And so if you want to force a trade, you can always find one by going down to 5 minutes or 3 minutes or 2 minutes or tick charts or whatever the hell you want. But I don't want to do that. I want to stick to bigger time periods so that I have the chance to be right more often. So, all right. Looks like our little Russell play that we talked about is moving pretty well. So if you are a more conservative trader, take your stop, move it to above this green candle right here on the 15-minute chart. By doing that, you'll essentially have moved your stop to break even minus 1 or 2 points. And you're and now we could be off to the races on here. If you're still in this position, I would say that your first target, you can pull a little off the table at 40 at 69 down here, where you've got that area of demand, that opposing level, and it looks like it's continuing to move from today. So, hope you guys have an amazing day. The rest of the day. If you guys have any questions or you need anything, do me a favor. Send me an email, support@tradersarmy.com, or you can shoot us a text message. The phone number for text messaging is right on the front of the website. Please do so. Tomorrow morning, we got our live trade room at Traders Army for those of you guys that are members. I will post up all of these charts so that you guys have them in the trade feed here in a few minutes. I really, really appreciate you guys jumping in with us today. Sam, looking for help on options in the future. Need a few more trades. Can I give you an idea on where to find options? So we have a session on options on futures, Sam. Give me just a minute, and I'll show you where it is. It's listed underneath the free classes at our website, so you can go watch that anytime you want. If you go to, let me show you where it is, just so you can see it. If you want options on futures. So if you once you go to the website, by the way, here's our text number if anybody ever wants to text us with questions or comments. Go to under Learn OnDemand Courses, free trading videos. So if you go to free trading videos, you will find that once you're logged in, I don't want to go through logging in at the moment, but once you're logged in, all you have to do is have a free membership. You don't even have to be a premium member for this one. But underneath free trading videos, we've got a video called Combining Options with Futures. That is something that you can watch anytime you want so that you have access to that. So feel free to check that out, Sam. Hopefully that'll help you. And if you've got questions, send me a text. Here's our number, 973-348-5022. And we can maybe hop on the phone and I can talk you through it. So, all right, everybody. That's all I've got for today. Once again, thank you so much for joining, and I will see you all soon. Later.